Now, I will do an updated earnings estimate again when we are closer to the time, which is going to be towards the end of January. But in my last video, I did my estimate for the deliveries for the quarter, so I thought I would just plug in some rough numbers and see what we come up with, just as an indicator. As I'm now back to my old ways of trading options, I find these projections that much more useful too. In all honesty, I was a little disappointed with the delivery numbers. Well, that's a bit strong, perhaps just not quite as high as I hoped they'd been. I was expecting to break 300,000 units or possibly higher, but this all draws down to the November production numbers in China. In October, we saw production numbers at the usual level, except for the fact there is a very high chance the factory was actually closed down for a whole week due to national holidays. In other words, Tesla could make the same amount of vehicles with nearly 1/4 of the time being down as they did the previous month. The thing is, we got the same production numbers in November, which was a full month. We've also seen Model Ys come out of the factory at some very fast rates, at around the equivalent of 2,274 a day. I think that Tesla do have a capacity for Model Ys of over 800,000 units a year. That is 4 times as many as we were initially told, at 200,000. I think this is a huge deal. I mean, it's beyond huge, and I'm getting tired of saying huge deal in every video. I should probably look up some more synonyms for it, but either way, it is a huge deal. It means Tesla can create ever so many Model Ys per squared foot at the Shanghai factory, which is going to be a lot more than everyone initially thought. We can then place that figure into, say, the Berlin factory and get a rough idea of what the capacity can reach in that factory too. Of course, the Berlin factory has more advanced manufacturing processes, so we do expect it to have a higher capacity per squared foot than Shanghai. But we've also been told that the Berlin factory can produce a new car every 45 seconds, yet we're seeing a new car out of the factory from Shanghai within 38 seconds. And Shanghai likely uses about 300 more robots and processes to build every car, and Berlin has an improved paint factory, hence why it's a big deal, and what it could mean if Berlin was able to get the process down to one vehicle every 35 seconds. FYI, that's a big difference of Berlin having a capacity of either 660,000 or up to 900,000. Like I say, I really want some validation as to Tesla's capacity in China. My theory is that Tesla can very well have a full capacity of 800,000 Model Ys a year, assuming 100% uptime. But Tesla has constraints elsewhere, not in the production line. The two likely factors are either semiconductors or batteries, although I do recall there being some powertrain shortages too. Therefore, despite the production lines being this efficient, it doesn't help if there aren't enough parts for the cars, which is why this capacity is so important. This is serious volume production. We know how difficult volume production is, as no one else, other than Tesla, has yet achieved EV volume production. This is evidence of extreme volume production. This is incredible. I get the impression people still don't realize how important achieving volume production is. Everyone seems to think that the Chinese will reach volume production and they'll simply sell the most EVs globally, but this still has yet to be seen. Think how many times you've heard Elon say volume production is really hard, and that much harder to do it at a profit too. I can think of about 5 times he also mentioned this on Twitter alone. So Tesla producing that much volume production from this one small factory is mind-blowing, and there have been 2 new factories built since this with these new advanced production techniques, and one of them is rather large and has 3 floors. It is most likely Tesla is still battery constrained then. This might be why CATL are building a new battery factory in Shanghai in the Lingang special area, which is the same area as Giga Shanghai. Coincidence? I think not. This new factory is meant to have a capacity of 80 gigawatt hours, which is about 1.3 million standard range Teslas. Of course, these will all be CATL's LFP batteries. I'm actually of the belief that Tesla will not be manufacturing any of their 4680 batteries in China. I think Tesla will use CATL as their battery supplier. I expect Shanghai to be the standard range LFP hub, and for some time, even when Tesla start making their own LFP batteries, I think Tesla may still stay with CATL in China, and it's also likely better for Chinese relations. As for Tesla's 4680 batteries, well, we also look forward to seeing those hit volume production too. Then we'll finally get to see what Tesla is really made of. My estimated deliveries for the quarter were 290,000. Now, I'm just using a preliminary template of financials at this stage, but I think it will provide some data as to what is going on, which may even help us guess what effect these new earnings will have on the stock price. I'll spend a lot more effort with the financials closer to the date when there is more information. It's a lot of work and not worth having to redo when we get the actual delivery numbers. But this will help me somewhat for my options trading to give somewhat of an indication. My theory is that even though deliveries are only up 25% or so, that because OPEX is getting relatively lower, that profits may be up significantly higher. And I think this will surprise Wall Street. We have nearly 50,000 more vehicles delivered this quarter. Anyway, I estimate that this will increase revenue for Q4 by $2.6 billion from Q3. Add in FSD and tax credits, and we're at $14.7 billion revenue, about 22% increase in auto revenue from last quarter. Now, I'm expecting a higher profit margin than last quarter due to slightly higher prices, lower costs, and more efficiencies. But also, the Model X line could be running at a loss, so it may cancel out, but it will be easier to tell when I get the actual delivery numbers. So for now, I'll just use the same margins we had for last quarter, and in fact, I'll just have the same energy and services too to keep it simple. And then we have a gross profit of about $4.5 billion, still up 22%, just like revenue. No surprise if we're using the same margin. As for OPEX, I'm going to increase selling, general, and admin slightly, so OPEX is about 7% higher than last quarter. This ends up with a net profit of $2.3 billion, which is a 43% increase from the previous quarter. Now, 43% increase in profits quarter over quarter sounds pretty good to me, and this just goes to illustrate what I've been trying to explain. Tesla will become so much more profitable. Every increment in gross profit margin goes directly to earnings. OPEX doesn't increase at the same rate as volume. In fact, costs might actually come down as more of the factories are amortized and when there is less left to depreciate. Just an increase in 23% more deliveries increases net profits at a rate nearly twice as high. A lot of OPEX is a fixed cost that will not increase with more deliveries. This will be felt in Tesla's operating margins as we go on. So what happens when Tesla quadruple capacity and hit 4 million deliveries a year? What effect will that have on operating margin then? Unfortunately, we will not see these be felt until at least a year, when the new factories start ramping closer to volume production. This might be somewhat of a smokescreen for Tesla's success. Lots of news right now, new factories opening, record profits. Then once the new factories are going, we get disappointing financials. Sure, deliveries and production will be increasing, but operating margins and gross profit margins are going to be decreasing. Net profits may even go down too. Then, of course, all the accompanying FUD with headlines like Tesla's new factories are a failure or Tesla can't enter the big leagues. But this is all to be expected. I'm thinking it will keep Tesla under the radar for that much longer, which will be good. I don't think it's good for Tesla to attract too much attention just yet. It's not necessary. We don't want the wrong people thinking Tesla might become a monopoly or all sorts of unwanted attention, which is also why I think Elon might be sandbagging. Then by the time we actually see the financials for these new factories ramped up, it will be too late. Tesla will be the biggest company in the world, and it will be harder to slow them down then. But once these new factories are ramped up, then the OPEX figure simply becomes relatively smaller to gross profit. On top of that, we do have price increases and cost decreases, particularly in these new factories, and especially with Tesla's new batteries. This is the point to wait to. This is when Tesla's stock price will get really exciting. Right, stock price. So what would this Q4 profit mean for the stock price? We are at $9.2 billion if we annualize this net profit. At an annualized PE ratio of 150, then we're at $1.38 trillion valuation. So a stock price of nearly $1,400. I get the feeling that most of you would agree with that and will also be happy with that. If I manage to hold on to one of my options I bought recently, then it would mean I'll be up about sixfold. But it's not always easy holding that long. Selling is just as important as buying with these fast trades. Again, let me know what profits you're expecting for the quarter and where you see the stock price. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.